Welcome back, and a reminder, call 604-280-CTV9 if you've got a question about your RRSP. Our panel of financial experts is standing by.
And looking very busy, as a matter of fact, but keep calling. Now, here's an odd question. Can your RRSP get too big?
CTV consumer reporter Chris Olsen is here with the answer. Chris, could this really become a problem for some people?
Well, Bill and Pamela, the short answer is yes. You've heard the saying probably that you can have too much of a good thing. Well, that also applies to RRSPs. And unless you have a clear picture in mind of what your retirement should look like, there's a danger you might make a mistake that could cost you tens of thousands of dollars.
That's like signing up to run an Olympic race and not bothering to decide whether you're in a 100-yard dash or a marathon.
That's how David Trahair says many people approach their RRSPs. He's author of Smoke and Mirrors, Financial Myths That Will Ruin Your Retirement Dreams. A common myth is that you need 70% of your current salary when you retire.
That can be very misleading and can lead to big problems. Everybody's percentage is different. So 1 in a million 70% might be the right number.
He says people who've paid off all their debts, including their mortgage, and have no kids at home might be able to live on 40% of their working income, which makes a huge difference on what you need for your RRSP. So the first step is looking at what your expected financial situation will be on retirement.
That's the key, beginning with the end in mind, looking at what retirement is going to be like and then working backwards.
To start figuring out how much you'll need when you retire, look at where your money is going now. How will your spending change? Will you have your mortgage and other bills paid off? Will you only need one car? Will your children be self-sufficient?
You know, there are other expenses as well that you won't have after you retire. If you stop working and you're earning less income, you'll be paying less tax. You also won't be paying into the CPP plan and employment insurance plan because you'll be retired. You won't be trying to put money away for retirement in terms of RRSP, so that's another cash outflow that you're not going to have.
Then look at where your retirement income is coming from before calculating your RRSP. Do you have a company pension, Canada Pension Plan, old age security, any inheritance, other savings and investments, and other income like a part-time retirement job? Then see how big an RRSP you need on top of all of that to let you live well in retirement. If you just put money into an RRSP without doing that calculation, there could be a problem.
There is a danger that it could become even too big.
Who knew that was possible? Most of us think bigger is always better when it comes to RRSPs.
One simple reason that's important is the old age security plan currently pays out about $5,700, $5,800 a year per person after age 65. But once your net income goes above a certain level, approximately $60,000, they start clawing it back or asking for the money back. So this is another thing that if you project your income at retirement earlier on, you can tweak things and change things so that you won't end up paying back a lot or substantially a lot of your old age security.
If you need a higher income, that's one thing. But if it's surplus money, you're giving up free federal money for nothing.
An RSP that's too big can, in fact, be negative. What I suggest to people that are in that situation is, at least a few years before retirement, consider reducing your RSP contributions and maybe putting that money in something else, maybe investments outside the RSP.
Here's why that's critical. It lets you control when you include those investments in your income. With an RRSP, it's automatic starting at age 69. Even if you really don't need the money, you have to take a certain percentage out every year and pay taxes on it anyway. So those are issues to look at with your financial advisor. To quote David again, you have to know which race you're in to know how to run it and how big an RRSP you really need.
All right, thank you so much, Chris. And a reminder, if you have any questions about your RRSP, give us a call. You can speak with one of our experts. Call 604-280-CTV9 to speak with our financial planners and investment advisors. They're from the RBC Financial Group.